VTI is an ETF provided by Vanguard, who own and operate the fund. Vanguard are the ones who own and operate the fund. Vanguard are the ones who actually own the underlying shares in the individual companies, so when we buy shares in the ETF, we buy from Vanguard, who continually issue new shares in an open-end fund and not the individual companies inside the ETF. Now, VTI aims to track the performance of the CRSP US Total Market Index before fees and expenses, which is a diversified or market cap size US index that hold companies across all 11 GICS sectors representing the best of America. VTI is one of the largest ETFs in the world, offering exposure to one of the most well-known equity benchmarks. VTI has a large appeal to investors seeking to build long-term portfolios, including all market cap US stocks that will never have to be sold, and follow the growth of all American businesses. The US Total Market Index comprises nearly 4,000 companies across mega, large, small, and micro capitalizations, representing nearly 100 of the U.S. investable equity market, which are listed on national U.S. stock exchanges and spans over approximately 24 separate industry groups. To find the ETF in your brokerage account, you will need to type in the ticket code VTI to bring up the options to buy or sell shares in the fund. It pays distributions, which are dividends from the ETF, 4 times a year at a 12-month yield of 1.4%. and has a management expense ratio, or MAR, of 0.03 per year. So, for every $10,000 invested, it will cost $3 per year in fees. This isn't a bill you have to pay immediately. It is automatically deducted from how much money you have invested in the ETF, so you never really notice anything being paid or taken out of your brokerage account. Now, since this ETF tracks basically all US stocks, it covers the broad American market and a range of industries. Unsurprisingly, the information technology sector is the largest, with big tech heavyweights making up the largest portion of the fund at 26, followed by healthcare at 14 and consumer discretionary at 17. Real estate, energy, and utilities make up the smaller sector allocations, all under 4. With its strong focus on American companies with favorable corporate tax rates and American entrepreneurship, VTI provides the best of America, which has consistently performed over many decades, and with its tilt towards innovation air technology, it provides diversified exposure to a high-growth potential sector. In one trade, we get access to companies like Tesla, Apple, Facebook, Amazon, and Google that are changing the way we live. Now, ETFs are considered to be low-risk investments because they are low-cost and hold a basket of stocks or other securities, increasing diversification for most individual investors. ETFs represent an ideal type of asset which builds a diversified portfolio. Still, unique risks can arise from holding ETFs, as well as other special considerations paid to taxation, depending on the type of ETF since inception. VTI has had an average annual return of 8.2% per year before taxes and a total cumulative return of 373, with dividends reinvested for the entire time the ETF was running, which goes to show the power of dividend reinvestment and the compounding effect over time. Now, of course, past performance is no guarantee of future performance, but it's always a good sign of consistently improving business fundamentals, continually driving each individual stock higher within the ETF. We prefer to look at the cumulative returns, as it includes the dividends paid to shareholders, which should always be included, as we're getting some value back, plus with the dividends reinvested, this is what provides the compounding effect, exponentially increasing our returns the longer we have our money invested in the fund. This is the sort of approach investors take, investing for the very long term using ETFs, and one day live off the investment portfolio as passive income through either dividends or selling down small parts of the position but maintaining the bulk of the capital. If you enjoyed the video, leave a like and subscribe to the channel for more investing videos. Thank you for watching, and we'll see you in the next one.